Good morning to day 3 of Red Cloud's Oktoberfest Fall Showcase Conference. Again, I'm Chad Gilfillan, Senior Vice President, Investment Banking at Red Cloud Securities. I'd like to first off thank our sponsor, Pear Tree Securities, for this presentation. Up next is Canada Nickel. Joining us is founder, chairman, and CEO Mark Selby. Mark and the team have quickly built on one of the largest nickel sulfide projects in the world in the backyard of Timmins, Ontario, a well-established mining camp. Mark, you'll have 10 minutes and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask questions using the Q&A link. And Mark, with that, over to you.
Excellent. Thanks, Chad. And very glad to be part of this Red Cloud conference, which is getting to be one of the destination conferences on the calendar. In 10 minutes today, just want to make a couple points. We are advancing what we think is the leading project of a new generation of nickel supply. We're aggressively advancing it because one, we think this is going to be one of those nickel super cycle, which emerges every 15 to 20 years. We went through one in the late 60s, another one in the late 80s, another one in the mid 2000s. And with the strong demand growth from EVs on top of continued strong demand growth from stainless steel, we think the market is shaping up for one of these super cycles by the middle part of this decade. This year is very demonstrable proof of our belief coming through. Nickel demand is up nearly 15% year over year. That's 3 to 5x what we've seen for the other base metals. And again, it's continued strong growth, nearly double-digit growth in stainless, with over 100% growth from the EV sector. And again, we are just getting going on the EV side of things. This is in the context where we've got a whole new bunch of nickel consumers, and rest of world nickel supply has been shrinking year in, year out for the last 5 years. So, developing a nickel project to be ready for this next super cycle, we think is a tremendous way to create value for shareholders. The second thing, and a key thing, why we believe we are going to be at the forefront of a new generation of nickel supply is fundamentally, nickel was supplied by the large sulfide projects like Selby that we've known for the first 100 years of its use as a metal. Unfortunately, every ton of nickel that was produced by these sulfide mines for a very long time generated dozens of tons of SO2 with a massive amount of resultant environmental damage attached to that. You had a second generation emerge in the early 2000s because the old sulfide mines couldn't keep up with the new demand from China. And that's been, all of the demand growth since that time has come in the form of nickel pig iron, which unfortunately for every ton of nickel that gets produced, generates anywhere from 50 to 80 tons of CO2. When Elon Musk set about to decarbonize transportation, he didn't want one of the key metals in that transformation to be a massive source of carbon. So we think the large sulfide deposits like the one we have just outside Timmins, which is very large scale, scalable because it's a large open pit operation and has tailings and waste rock that spontaneously absorbs CO2, will be the new generation of nickel supply to supply this emerging source of demand coming from the EV sector and continue to supply additional nickel for the needs of the stainless steel market. The deposit, as Chad said, just outside Timmins, we have all the infrastructure in place you'd need to build a big mine. We have great relationships with the local community and First Nations group. We have already trademarked, and we're way ahead of this, just after we formed the company in terms of establishing trademarks around net zero nickel, net zero cobalt, net zero iron in a number of major markets, because we believe we will be able to produce a zero carbon product, which obviously will be very critical to markets going forward. We had a great release out a few weeks ago in terms of some real substantial improvements that have significant multi-$100 million NPV benefits to the project from the PEA. We did our PEA in May last year. That was just over 18 months from when we first started drilling this project, when we acquired it in September 2019. And we expect to have a feasibility study done by this time next year, just over 3 years from when we first started drilling this project. It's a new discovery. It's one of the largest nickel sulfide resources globally, and we're getting it ready to be in a position to take it forward. In terms of nickel demand, every commodity analyst this year had nickel in a massive surplus of about 4 to 5%, because every analyst always underestimates nickel demand. And so, we expected a balanced market this year, and where we've ended up instead of these 4 to 5% surpluses, we've seen a market this year that's in about a 4% deficit, and will be one of the largest absolute deficits in the nickel market, in the history of nickel. The forecast that we see is, the market needing more than double the amount of nickel that was supplied in 2020. And again, outside of Indonesia, very little visibility in terms of where the supply is going to come from. So an ideal time to be able to develop a new project in a great location like Timmins. In terms of where we are in Timmins, this is a 100-year-old gold mining camp. You literally travel up the highway. That sole purpose is to connect Timmins to the Trans-Canada Highway to the north. You have all the major infrastructure, road, rail, power, all in place. You've got a community that's very comfortable with mining. You've got 4 of the 6 largest gold and base metal projects that have been permitted in the last 15 years are within a few hundred miles of Timmins. You've got Osisko to the southeast, Dumont, which I permitted in my past life, to the east. You've got Detour Gold to the northeast, and you've got IAMGOLD's Côté project to the southwest. So again, a great location to be able to build a large, low-grade open pit project like we have with Crawford. The PEA we put out in the springtime, underpin the economics that we're expecting from the project. Over $1 billion NPV, 16% IRR, and again, for a multi-decade base metal operation, that's comparable to what all the leading projects would be able to deliver. In terms of scale, 40,000 tons of nickel per annum once fully ramped up. In addition to the nickel, we'll be producing a magnetite concentrate that has chrome in it, and we'll be producing over 20 million tons of iron and 1.5 million tons of chrome, and that's on a 25-year mine life. Cash cost of just over $1 a pound, all-in sustaining cash cost of just over $2 a pound. And you can see with the kind of scale and cost structure we're looking at, just how much operating income and cash flow we expect to generate going forward. Now, one of the key things, and again, what we've seen today with Noront, with BHP upping their bid once again to try and acquire them and overtake the bid from Wyloo. The majors want nickel projects, and if BHP's thinking this way, that Rio Tinto, Anglo American, and all the other majors are thinking that way. And there's certain things that they want scale. So our project, if it was in production, ramped up and in production today, we'd be the 5th largest nickel sulfide operation globally. In terms of Canada, we would be the largest single base metal operation in Canada today, larger than Teck's Highland Valley operation, larger than Glencore's Raglan operation, larger than Vale's Voisey's Bay operation. Again, the kind of scale that the majors and large mid-tiers are looking for. In terms of cost curve, well positioned in the first quartile of the cost curve. And almost more importantly going forward is where you're sitting on the carbon curve as mining companies look to decarbonize their asset portfolio. We're already in the lowest decile of carbon intensity. That does not include any of the benefits that we expect to see from our tailings and waste rock ability to capture CO2, and we're in the process of quantifying that right now. So again, in terms of ticking all the various boxes that a major and mid-tier is looking at in a project, we're shaping up very, very well. We are a low-grade ore body, but because of the minerals in the ore body, we produce a very high-grade concentrate. Our high grade would be targeting 35%, which would make it the highest grade concentrate in the West, and the other 60% would come out in a standard grade concentrate that looks, mostly like the other nickel concentrates you see in the market today. The results we put out last week, have a huge benefit. We're targeting 4 to 5 point improvement in our feasibility study results. You read through that, you're looking at $350 to $450 million of additional value. We're looking at a 10% recovery improvement from the results we put out last week. We got anywhere from 6 to 16% recovery in the open cycle test that we did. So very, very happy, as we unlock the value with the PEA. The PEA was done very, very early relative to when most juniors would do it. So we have a huge amount of exploration upside. We've got 50 to 100% additional target for the resource that we'll have to use in the feasibility study for next year. We'll have the recovery improvement that we talked about. We'll be quantifying the carbon footprint benefit. Any of the cobalt PGMs that we decide to sell into the EV market, when we're targeting about half our sales to get into that section of the market, we're looking at very, very substantial NPV improvement for the feasibility study versus the PEA. one of the other big streams that we'll be talking about, as the year goes on is, we really believe that Crawford is part of a large district scale opportunity, and you're going to see a bunch of news flow on that. We successfully stepped out to several other targets in the region, and we're in the process of acquiring additional targets within the Timmins region. I've talked about the BHP Wyloo, but over the past 18 months, we've already seen a substantial amount of corporate activity targeting large lower grade sulfides. And so again, I think this year is shaping up very nicely for an exciting 12 months. When you get a new discovery, and Crawford is a new discovery, and when it's the right scale and in the right location, they trade out at very premium valuations. And you can see here the kind of valuations that these kinds of discoveries have traded out historically. So, we think Crawford, is going to be one of the largest, if not the largest, sulfide discovery in many, many decades. And so we're going to be very well positioned going forward. We're now having 7 analysts cover us, so we're in great shape on that front. And so again, we think a nickel super cycle is emerging for the middle part of this decade. We think the nickel market needs a new generation of nickel supply that has a low environmental footprint, and our projects and Canada Nickel intend to be at the leading edge of that next generation, and Crawford is an ideal location, to be what we think is going to be a leading district scale supplier of nickel for many decades to come. With that, I'll be glad to answer any questions.
Thanks, Mark. Great presentation as always. My question, I haven't seen this from the early days, going from zero to one of the largest deposits globally. How do you balance obviously the resource definition versus exploration drilling, and do you have a rough split on that budget as you're working to 2022?
Yeah, so far this year in 2021, I'd say 90% of what we're spending is really on resource drilling, is to get that 50 to 100% larger resource. We used 900 million tons out of 1.1 billion ton resource for the PEA. We expect that 900 million tons to increase by a good 50 to 100, 50 plus 100%, and that is going to be out of a resource that's 1.5 to 2 billion tons that we expect to have just at Crawford. As we go forward, with the other regional targets and some of the other opportunities that we're looking at, we're really going to be focused on at that time, not drilling for drilling's sake, because literally with that resource upgrade, we'll have a 40-year resource in place. So year 41 is not going to add that much value. But when you look at when projects get acquired at 1.2 times NAV, 1.5 times NAV, it's really about having a very clearly demonstrated resource potential, exploration potential, and that's what we want to make clear with some wide space drilling on a number of different targets to really highlight the fact that we think there are multiple Crawfords in this property.
Yeah, that's great. And I know you went in detail on the network, but maybe from a qualitative sense, just kind of what you thought versus expectations and what came out, and really how important that is to the story.
Yeah, no, we did the PEA with less than a year's worth of work. And again, these types of deposits do require some work, because there still aren't 25 of them in production today. And so, again, we have a target of 4 to 5 points improvement in nickel recovery. Each of those points is worth 90 million US NPV. And so, the fact that in the open cycle, we got anywhere from 6 to 16% was great. And that we got, 10% improvement versus what was modeled in the PEA in the lock cycle was outstanding. So, the fact that we had some, recoveries of 60% plus, is great. And, again, we're not done. We still have another, 4 to 6 months of improvements that we're going to be working on before we get into all the variabilities testing and pilot testing that we'll have for the feasibility study. So, very, very happy with the huge step forward and the value that's there. And there's, still a little more room for improvement to come. So very much looking forward to that.
And with 30 seconds left, what kind of news flow do we expect from Canada Nickel in the coming quarters?
Yeah, so you'll see additional de-risking steps around the feasibility study in terms of clearly demonstrating how we're going to add value through the fees process, and then secondly around this district scale play, you'll see us really start to highlight what that exploration potential could look like. So it's going to be a pretty exciting 12 months to come.
Excellent, great to see you, Mark, and thanks always for participating.
All right, thanks, Chad. Have a great day, and thanks for everyone for listening.